Hello everyone, K Kim here with the Traders Club. Today's November 11th, 2016, Friday. Market has just closed. A lot of interesting stuff has been happening here last several days. Dow Jones Industrial Average have printed another all-time high, currently standing around 18,850-ish there. After Trump's election, this thing really rallied, and this thing is a monster. Last 3-4 days here, while the bears and market crash theorists and all the put holders and short sellers been calling the crash. They have been calling the final stage of this country to be completely dismantled. I mean, it was crazy what these people saying. When the Trump got elected, people are saying, end of the civilization. I mean, all kinds of... That's what bears do. They want to profit from this country's misery. These guys are inspired by the Big Short, movie Big Short, back in 2007, and they want to make some 1,000% gain in their puts with the quick market crash sell-off. Well, those guys are very miserable. They love to go around and act cocky and throw things like all these different whatever they're biased, arbitrary conjecture ideas of why they think the market is going, and not to mention these guys been brainwashed. These guys been brainwashed by listening to and watching and CNBC and all kinds of stupid media sources think that they can get their investment idea and can profit. Now, do you really think that CNBC cares about you? Do you really think that you can just sit there, watch TV, and you can make bank in the market? Maybe you get lucky one of these times, but you cannot do that consistently. David Stockman, this was on November 5th. I mean, how does this guy know? David Stockman warns both Trump and Clinton could lead to 25% sell-off. Sell everything. Well, I'm sure he sold everything, and he probably not making any money. It just crazy. And all throughout this year, how many times you've been hearing the crash? How many times people are comparing chart with the 1987 Black Monday crash? Every year somebody does that. It's just stupid at this point, right? Anyway, Dow Jones Industrial Average is new all-time high. And you know what people always say? That's a bull trap. Do you hear yourself? If you've been calling new highs a bull trap, you're an idiot. You know why you're an idiot? Because you're a type of person that you call this a bull trap, not understanding that's not a bull trap. That's a cultivation of new highs, so you can create new lows, new highs, new low. That's not a bull trap, guys. Ladies and gentlemen, you embrace new highs. When you see new highs, you understand the trend is getting established. And I've been preaching on this for years now, right? So, what happened? It has nothing to do with Trump and Clinton. Do you guys understand this? It has nothing to do with the Trump or Clinton. Do you get this by now? We have to be logical. Think about it. With the FBI news, because Clinton is not guilty, so market soared. Future was up 2%, and then market soared next day. So with that logic, then if Trump got elected, this thing should have tanked. And you say, well, it was tanked, the futures were down like 5%, but this market is rigged, this market is manipulated. You only say it's manipulated because you're losing money. Because you're losing money. It has nothing to do with it. It has nothing to do with the Trump or Clinton. It's all in the charts. We made new all-time. When was the last time? Go back and study. When was the last time when the stock market saw its correctional move and then made new highs or new all-time highs and then that thing crashed? Never. Go back. Never. Again, the variables is this, is that stock market pulls back, right? Gets a correction, and then it gets a new high. No. Just go back, even looking at just 2008 correction, right? This is 2008 correction. We had the head and shoulder formation. We broke below that. You can call that a correction. And this thing, let's say if this thing made new all-time high, something like that, then we would avoid it. It didn't. What happened? We continue. This thing continued to fall below the 200 SMA. I made a plenty of video lessons on this. If you can go on my blog or my YouTube, you can understand what it means to have a market top, what it means to have a crash or correction, how to look at your moving averages and whatnot. So with the 100 SMA and 200 SMA rising, what does that mean? What does that mean when the 100 SMA and 200 SMA rise? It means benefit of the doubt goes to the buyers. Benefit of the doubt. It's not a guaranteed thing. Nothing is an absolute. Just because we have 100 SMA or the 200 SMA rising does not mean that it couldn't do something like that. It just means it has a higher probability of doing something like this. Because obviously nobody knows. Nobody knows anything in the market for 100% as 100%. Like they don't know for sure. All we have, you and I, all we have is a probability. We understand it. So Dow Jones soars, make new all-time high. This is not bear's signal unless you are just those short sellers just scalping just here and there, just 1 cent at a time. You're scavenging, whatever falls on the master's plate. You're just grabbing little scraps. And I'm sorry to put it like that. That's not how I trade. I don't think you can make big money doing that. Just scalping here and there. Trying to short it here to see that overbought pullback, rather than doing that, I would think it would be so much more prudent to able to ride the trend and able to get the full swing instead of just getting a quick couple cent scalping here and there. I hope I'm not here to offend anybody in your trading style. If you're a day trader, you shouldn't even be watching me as of today. You shouldn't. You don't care about big picture. Who cares about big picture if you're a day trader? But if you want to understand, if you want to ride the trend, then this is important. And looking at Russell 2000, obviously, let me get rid of all those names or numbers. This is parabolic. That's pretty much straight up there. We saw something similar in Brexit. How many people call that there's going to be a crash imminent? How many people, right? How many people call that? This thing is very bullish looking. I mean, yes, we saw like 4 or 5 days of straight up move, so there might be some slowdown, there might be some grinding higher move before it gets a pullback before going up. That's what we call an uptrend. And people always switch back and forth, right? How many people were so cautious down here or so bearish down here, right? I mean, this whole year I've been calling. I'm not a perma bull. I talked about late last year. Looks like we're in a downtrend, a very dire situation. But once we have started to establish, this is what we call inverted head and shoulders. It's bullish. It's bullish. You will not. This is a conference. This is bullish. We had the inverted head and shoulder confirmed, came back, retested it. It's very bullish at this point. Very bullish at this point. Looks like Russell 2000 will continue. I think Russell 2000 will look a lot like, here, let me do this. this. That's what I'm thinking. Right? We had that down move right there, and then we did this. We had that down move, and it's gonna look a lot like that. Obviously, nothing goes straight up or down. It's gonna make it up, comes down a little bit, goes up again a lot, and comes down a little bit. So it actually, you profit more. Don't try to short this, wait for it, and then go long, and then ride that trend. That will be more prudent thing to do than trying to scalp a little bit up here, a little bit here and there. It's just very stressful thing to do. You know what I mean? Just because most people were so fearful of the market that it was going to crash, that majority of traders that you see on StockTwits or Twitter or blogs that you read here, majority of people was not able to profit from it. Let me tell you what, that majority traders, they did not profit from it. Just go back and see what they were saying. Read their blog, read their videos, and see what they were saying down here. Then you can see. And then all of a sudden they're super bullish here, right? But majority of people did not profit completely. Maybe they started getting long just today or yesterday. A lot of people are talking about the NASDAQ, and they're calling head and shoulder formation. When will they ever stop? You know what I mean? It's just like, why call head and shoulders now? There are people calling head and shoulders here. There are already people calling head and shoulder here. I mean, it is baffling to me. When you have Russell 2000 soaring, when you have Dow Jones Industrial Average making new all-time high, and when you have the banks, oh my God, banks have made new high. This is a monthly chart, guys. New highs. Okay, this is a new high. Last time we made new high on the banks, you know what it did? This is what it did. And I'm not saying that's what's going to happen. But look, just look at that. That's a breakout point. That's a breakout point. This is a monthly chart. It looks like this thing is ready for another huge bullish move. So you got the banks thriving here. Not only that, you also have the transport breaking out. Transport breaking out. We have another inverted head and shoulder formation. You can learn about these inverted head and shoulder formations, all these different formations on my blog or YouTube, on video lessons that I put out. And even this downtrend, we're above that. We're even this horizontal resistance. We have gotten above that level, and this resistance also. And we're breaking out, confirming this inverted head and shoulder formation. This is we got big, wide inverted head and shoulder, and on top of that inverted head and shoulders, we got this another right shoulder forming with the inverted head and shoulder. Do you see this? And then we got the big inverted head and shoulder. That's a major reversal pattern. Okay, so we have all these major indices. Dow Jones making another all-time high. Dow Jones Transportation Average. Dow Jones Industrial Average making new all-time high. Dow Jones Transportation Average just breaking out. Confirming the inverted head and shoulder pattern. We're above all the moving averages. This is what we call golden cross. And Dow Jones and Transportation Average is poised to make another new all-time high. Maybe this year, maybe in early next part of this year, or in early part next year, but this thing's poised to go higher. Looking at a big picture. I'm not talking about Monday or Tuesday. And we have all these positive signals going underneath. Not even underneath, you can just see it in these major indices. And then these shorts and these doom and gloom people want to call head and shoulders. And I'm not trying to be cocky. I know shorts are very extremely cocky. That's not what I'm trying to get at. What I'm saying is, it's almost baffling, it's almost preposterous to suggest anything like it at this point. To even suggest that we're going to have head and shoulders here. What? How many people call this a double top? right? That Brexit. You wanna call trap? That's a trap. Okay? Stop calling new highs a trap. That's a cultivation. This is a trap, right? There's a bear trap. That's how most bears get trapped. This is another trap. Probably looking at here, most bears are, aha, we have a broken below this support. That's a trap. So NASDAQ has already made all-time high just September of this year. And I mean, the minor term, yeah, I'm sure. Minor term, we're struggling a bit. And it's mostly because, you know, these tech companies, they oversee they export their jobs overseas, like China and other places, because they can make things much cheaper, like Apple and things like that. Like companies like Apple and IBM. So these tech companies got hit pretty hard. And a lot of these tech companies, CEOs, not so happy with Trump electing, because Trump saying that he's going to keep the job here in the United States. And so, you know, the bears got rattled. Not bears, but investors. Generally, investors and traders got rattled because of that. And so we're seeing a little bit of slowdown. But Trump's not going to be in the office until, what, January? And do you think this is going to be his priority thing to do? Make sure these companies like Apple will, you know, not export their jobs in overseas, but to do it in America. He probably work on it, but he probably not going to do it right away. So we'll probably have a little jitters and just a little bit of fear among investors. But I think it's going to continue to high. I think sooner or later, NASDAQ will catch up with the Dow Jones and everything else, and the Russell and the financial sector, and it will continue to climb higher and make another all-time high and continue to reason back up. I am very bullish in the market towards the end of the year. Again, I'm not talking about Monday or Tuesday. Don't tell me stupid things like, well, Monday we get a decline. You're like, aha, Kate was. That's not that's not what I'm saying. I'm talking about big picture. And if you go been following me, I've been bullish this whole year. I've been bullish this whole year. Not to, you know, brag or anything like that. And I have reasons. You can go back and check my articles and videos. But you know, even with the election, you know, I held almost all of my longs through the election. And then when futures are coming down, like what? Dow futures were down for like 700 points on the election day. Did it get me worried a little bit? Yeah, it did. I'm like, okay. But did I panic? No. Because with the futures, you never know. And when I got up in the morning, and obviously after the speech was done with the Donald Trump speech, futures recover more than like 65%. So that's when I went to bed. So and then it was only down like about 2%. So it's not that, it wasn't that, but I'm like, it still looked bullish even with the futures down about 2%. You know, and then when I got up and then I looked at the market, Dow Jones was just. It looked like nothing happened. It looked like nothing happened. I think it made a lot of people really upset. A lot of shorts were probably crying after that happening. This is a reason why you don't just gamble on these guesses. Just because Trump is going to win doesn't mean the whole market is going to crash. And listen, especially after we have a good cultivation of an uptrend here with all these moving averages, just because Trump, you know, is getting elected, you're gonna see this thing plunging 25%. Why? I don't understand it. Gold has coming down pretty hard here. We've been talking about gold. We talked about gold. This GDX is at a pivotal, prominent resistance level. I mean, picture perfect. This is why you have to respect technical analysis. You know, how are you gonna know these levels without technical analysis? This thing tanked since then. I've been saying that the gold and silver looks like in trouble. Another low here. We got lower highs, lower lows. Looks like GDX is going to come down to fill this gap at 2009. Last time on my last video I've done on, there's a YouTube video I've done on gold and silver trouble video. I talked about this thing come down and fill that gap right here, and then you could bounce back up, and then maybe fill in, and then get to that old support as a new resistance, and then pull back. That's what happened here. Probably could come back down, fill this gap, maybe another run up. I'm not sure. You'd have to see, and then possibly continue lower there. As of today, it doesn't look like it's reversing. We're in a downtrend right there. Not only GDX is a downtrend in a big picture, right? I mean, with this thing still below this falling resistance, this is a primary term downtrend, right? If the gold buyers want to see this thing turning around, you probably want to see this thing going down, going back up, and start to cultivate this higher lows and higher highs. That's probably what you want to see. You really want to buy gold here, or you've been buying gold at the time. You've been listening to Mike Maloney, all these gold pumpers. These guys pump gold because they want to sell you their physical gold. You know that. These guys, go back and do research on these guys. They've been pumping gold up here. I have videos exposing that. They've been pumping gold up here. And all the way down, they've been pumping gold that this is the last time, this is once in a lifetime opportunity. Every year they say that because they're gold pumpers, because they want you to buy their physical gold. They're gold sellers. Does not look good here. 8%, down 8% today. As the equities continue higher, everybody's just fleeting gold. Gold share, that was GDX, but this is gold shares. This thing is just, it's just simple technical analysis, guys. That's what we call downtrend resistance, in case you didn't know. A downtrend resistance. So we did see a pretty good bounce. I mean, that's a good bounce. But we've seen some pretty good looking bounce in the past that looked like potentially that was a reversal. I mean, how many times we see these bounces and then it just really disappoints? And I've been talking about when you should buy or when you should start investing in gold. I'm not talking about trading, investing in gold. I'm not talking about day trading or swing trading. I mean, if you're able to swing trade up here a couple times, that's great. But that's not what I'm talking about. I'm talking about, actually running with when this thing actually starts really rally. But right now, it doesn't look like it. This looks like head and shoulder formation. See, I have a physical data to say that this might be head and shoulder formation. At least I see it in my data. You know what, people, when they're calling for head and shoulder formation on the NASDAQ right now, that's just stupid. Oh yeah, could be a head and shoulder formation. Where? How do you know? See, when you do your analysis with technical analysis, do not do your analysis with the data that is not there. I always say tangible data. You need tangible data before calling anything. Where do you see this? It's a ghost data. I don't see it. But when you look at gold, when you look at GDX, I mean, you see it, don't you? You actually see the data. I didn't draw it there. It's there. It's tangible. This is why it's more in trouble because of that. Gold, similar thing there. Looks like it might come and fill this gap at 115.39 on gold shares. There might be some pop. A lot of times when the gap gets filled, there's some pop. You see that gap right there got filled. We saw that bounce and fill this gap and then turn. So currently we do have a lower high and lower low, and minor term sentiment is bearish. And so watch out for this thing going up again and pulling back to fill this gap at 111.87. Again, if you're a buyer here, you want to see this thing doing something like that and then getting above this downtrend resistance. Until then, this thing is bearish. Okay, you want to see something like that. I would wait for a confirmation instead of just guessing it at this point, because the 200 SMA starts to kind of sideline here, starting to move sideways a little bit. If the price gets back up, these 100 and 200 SMA will continue to move higher. That will be a good sign. But let's say if the price starts to roll over and starts to get below 108, 110, 111, what's going to happen is 200 SMA will start to pull back, and then it's going to look very gloomy. Very, very gloomy there. So watch out next month or 2 years, see how it plays out. Silver also does not look good. We are this downtrend resistance here, this peak, and that just kept grinding, hitting the head on top of that level. It tried multiple times to get above it, was not able to do so. Continue to cultivate lower highs there with the lower lows. Right now, we haven't gotten below, and looks like we're just right at the 50% retracement. Next support will be about 1561, probably coming down to fill this gap, I'm assuming there. And then there's another gap here at 1516. There's another gap at 1516. So both gap might get filled, and then maybe there will be some pop. And then if this thing gets rejected again at a certain level, there's another gap at 1441. Again, if you want silver to recover, you would want to see this thing doing something like that, right? And then start cultivating this higher high and higher low. Until you see that, if this thing continues to be below this prominent downtrend resistance, it's a caution, it's a huge volume there. It's not a good signal at this point. It is more concerning is because of it is all happening behind this downtrend resistance on GDX, GLD, and silver. If this something like this, let's say this thing thrive and then start pulling back, I think that pullback is a dip buying opportunity. I really think so. Let's say if this thing went up above it and then started pulling back, I'll be buying the dip right there. But it's because it is happening below this downtrend resistance that it's that much cautionary. So I wouldn't want to buy any of this dip. Again, I'm talking about longer term trading perspective. I'm not talking about day trading. I'm not talking about short term swing trading. So I'll end the video with this. I am very bullish in the market overall going into rest of this year and next year. I'm very bullish going into 2017. I think all these indices will do very, very well, get back into primary term uptrend. And when I say primary term uptrend, I mean primary term uptrend. This is a primary term uptrend. It will have its ups and downs. That's what market does. But just think about Marc Faber. He's been calling market crash every year since 2011, every single year. So this is what I'm getting. If this thing starts to move higher, up and down like this, somebody will be always calling market crash. You know why? Because when somebody says market crash, when somebody comes out with a dark, gloom report, everybody wants to listen to it. It's weird how people are just so drawn to these phony messages. Even when my title is negative, I tend to get more views. When I say something like market decline, then I get more views versus market analysis or something like that. It is crazy, but there are so many phony people out there calling crash. Before I let you guys go, I just share this one chart, one YouTube video here with you. One of my followers on Twitter has shared this with me, saying that just another crazy guy calling a crash here. Market is here now, and then this thing is gonna go. I didn't watch this video. I'm just going by this chart that he has showing here. Is Gregory Menarino. He has 45,000 subscribers, almost 45,000 times more than I have. Maybe he is a very, prominent guy in YouTube in financial. I don't know. He got 14,000 views, but that's probably not gonna happen. That's again, we'll see. We'll have pullbacks, but that going. I mean, what S&P 500 to 9,800. That is just. I just don't even know what to say. I don't know. just if you've been able to see the market, even if he understands how this market works, that's just my thought on it. As always, best way to connect with me, you can follow me on Twitter and StockTwits, and you can subscribe to my YouTube channel, 2K Kim. But the best way is always put your information here, email updates. You never miss my analysis or videos, articles or videos. That way you would have the link to your inbox. And as I go forward, end of this year and late or 2017, I'll be writing articles on stocks that I'm currently in, some stocks that I'm currently in, or the market analysis and forecasting the market. Obviously, I am bullish in the overall market in a big picture. So I've done enough videos. To give you guys, perspective on the big picture things, right? The big picture perspective. I mean, I've been saying since 5 months ago, 4 months ago, why I believe that, 5 reasons why stock market not to crash, gold and silver price to tank, stock market 5-year bull run is coming. That was historical breakout. That was 6 months ago. So I've been saying that the market is poised to go higher. The market is poised to make new all-time high. And when I started writing these articles or making these views 10 months ago, 8 months ago, this was in 6 months ago. Stock market crashed, not explained in one chart. 6 months. This was when everything looked very, very bullish. I mean, no, bearish. When everything looked so gloomy that I'm not trying to say I told you so. I'm not saying that. I just, because I won't be talking about big picture anymore, because I already explained in these videos that why I think the market will not crash. I don't think we're not going to see crash in 2016. We're not going to see crash in 2017, nor 2018. At least for minimum years. Yeah, I did say that 5-year bull run is coming, but at least few years, we're probably not going to see crash. We'll see corrections. We see pullbacks and declines. We will not see crash. When people always like to throw around word like crash. When you say crash, we're talking about crash. This isn't a crash. You guys understand that, right? When I say crash, meaning that took a couple years. That's a crash. That's a bear market. That's what I mean, a crash. So, there's plenty of videos there. Going forward, I won't be doing any kind of big picture analysis. I will be looking at more of a, intermediate term to minor term analysis. And also even, my recent video on here.
Ready to buy.
Hello everyone, and this is a video from October 30th, right before the Halloween. And I told you what I was going to do. I said that this thing's going to come down a little bit around 210. I said I would buy that dip. And then this thing will continue towards the end of the year and rest of the, towards the 2017, minimum till 2017 summer. So I was going to buy the dip on Spider and some of the stocks that I'm watching. And that's exactly what I did. We've been buying that dip. We bought the dip on Russell. We bought the dip on Spider. We bought the dip on Apple. And we bought the dip on eBay, Intel. Just to name a few, which we believe that as the market continues to move higher, that these names will do very, very well. So you can subscribe to my channel also. But it looks like market is poised to establish new uptrend, resume. I think the correct word will be resuming back up to its primary term uptrend, because I believe this was, and something I've been saying is this does not look like a topping pattern to me. It looks more like a channel before resume back up. When I say resume back up, because we were in a primary term uptrend. Everybody wants to keep saying that if you go to actually monthly chart, you can actually connect these. Everybody wants to keep saying that we've been in a downtrend. We were not in a downtrend. This is the reason why you want to look at a big picture, right? You can see this monthly chart. We continue to hold this level. That's what we call primary term uptrend. Look at this monthly 50 MA coming here, just acting as a perfect support. This is the reason why you want to understand a big picture perspective, not just look at day-to-day basis. And you want to look at day-to-day basis. You want to look at tick by tick, but I wouldn't look at you know, I don't care about 30-minute chart. I don't care about 10-minute chart, 5-minute chart. Again, if that's your thing, that's great. But if you are more of a longer term trader like myself, or you want to be, you don't want to mess, you don't want to deal with that. Who cares about a couple minutes? Who cares about a couple, 30 minutes, 50 minutes, 60 minutes? You want to understand big picture, and that's what stock does. What the market does is market does not go straight up. Once the market wants to establish trend, it will come down, creates a higher low, and goes up and comes down and creates another higher low and goes continue higher. And a lot of people say that now. But I've been saying this, and I'm not trying to say, I told you so. It's just that, I don't even want to tweet anymore. I don't even want to do these videos anymore because there's so many people always act like they knew something. Always gonna act like they saw this move when they were not, when they were afraid, when they were being bearish down here, when they're bearish down here, when they're bearish down here. And then when they start they move, they say, and then when all the moves then they act like they knew this. Yeah, the higher lows, yeah, the higher highs, yeah, of course. Like they knew. That's why you gotta do your research, who you follow. Just don't follow them. Do your research, what they've been saying in the past. And I'm not saying everybody makes wrong call. I make wrong call plenty of times. That's not what I'm saying. Is that when I do make a wrong call, I say I made a wrong call. I don't act like I knew anything. I say I changed my views. I said I changed my views now, but people always act like they knew it when they were bearish down, when they were cautious that this thing could even possibly come to 1700. And then once they did this, yeah, it's higher low, so therefore it's bullish. Yeah, 200 SMA here is, yeah. Anyway, that was my overall analysis and a little bit of rant there, but I have a good weekend. I am actually very, very pleased with what things turned out. We are doing very well. It looks like I'm gonna, it was difficult year when, especially for me as a longer term trader, it was a difficult year when stock was not going anywhere. But last several months been doing very well, and it looks like our portfolio was gonna, close the year much stronger than I thought, but it looks like 2017 could be the year for many longer-term traders, as I believe that these stocks will continue to resume back up and move higher. And obviously, more of a minor term sentiment wise, where we are minor term wise, we possibly overspot and we may see a pullback, but doesn't mean there's a time for sure. And I don't know how far it can go. You can keep, what's gonna happen is it could really aggravate shorts if you're trying to short this because it's overbought. It could really grind for a long time. So I really wouldn't advise you to short unless you want to just scalp here and there, just a little tiny couple cents shorting. But at this point, market is bullish. Looking great for 2017. I'm very excited for 2017, but it looks like it's also going to be closing the year short. Probably underperforming fund managers trying to catch this move, trying to make that their track record better, track record better towards before the end is over. Before the year ends. Sometimes I'm thinking a certain way, but my mouth cannot catch up with my brain. But yes, I've been speaking for 40 minutes, and if you're still listening to me, thank you for supporting and listening to me, and have a great weekend. I'll talk to you next market update.